Good morning and welcome to the Killik & Co market update. This week we've been looking at the minutes from the latest European Central Bank meeting, and those do highlight a real concern about the strength of the euro versus the weakening dollar. So as the euro strengthens, it becomes bad news for European exporters because their products and services look more expensive to overseas buyers. If you have a look at this chart here, you can see the relationship between the euro and the dollar over the last 2 years. And as the line goes down, that shows the dollar weakening. So you can see that over the last year in particular, there has been a 15% move in the relationship between these two currencies. And that's a real concern for the European Central Bank because at the moment they want to start tapering back their quantitative easing programme because the economy is doing well and it no longer needs that level of support. However, it's likely that bond yields will rise as they start tapering that back, and that will cause further strengthening in the euro. So they're in a difficult position because they want to taper back the programme without causing undue strength in their own currency. So it's very difficult for them to know what to do. Also in the minutes, there was concern about the potential of the US starting a currency war. So that's where economies try and force down the value of their own currency in order to make their exports more competitive. And that was highlighted by this quote in the minutes, which said that concerns were expressed about recent statements in the international arena about exchange rate developments. And that's followed some comments coming out of the US last month, where they said that a weakening dollar was good for the US economy. And also in the minutes there was some concern about the volatility in the euro, and it was said that this was a source of uncertainty which required monitoring. So lots of issues for the ECB to be focusing on there. Last month I showed you a slide about the strength of various different commodities throughout 2017, and in particular I said that the price of cobalt, the metal, had risen by 129% in 2017. Now cobalt is used for coatings on airplanes, it's used for batteries in mobile phones, and it's also used for electric vehicles. So we've had these three industries fighting over the limited supply of cobalt, and that's actually pushed up the price even further as we move through 2018. Now about 2/3 of the world's supply of cobalt comes from the Democratic Republic of Congo. So they've actually experienced lots of visitors from these three industries coming to the area and trying to lock in long-term supplies of cobalt. As yet, no miners have wanted to lock into a long-term supply deal, and that really highlights that these miners think that the price of cobalt has further to rise. So definitely something to keep an eye on there. And last of all, it's the start of a new Chinese New Year. It's Year of the Dog in China, and that means a slightly different thing in financial markets, so let's hope that's not a bad omen. Now, at the start of a Chinese New Year, it's traditional for married couples to give red envelopes full of cash to single relatives. So it's a very big tradition, and you get huge amounts of cash changing hands. But over the last few years, that tradition has moved online. So about 4 years ago, Tencent, which is the largest internet company in China, they launched the potential for couples or relatives to send digital red envelopes, so moving money online. And just 4 years later, this year, 768 million digital red envelopes were sent via Tencent. So I think that really does highlight the digital opportunity that we have in China. And moving on to the week ahead, we've got a number of companies reporting. In particular, we've got house builder Taylor Wimpey, we've got the marketing company WPP, and we've got the beer giant Anheuser-Busch InBev. That's it from us. Have a great weekend, and we'll see you next Friday.